Hey, good morning, everybody. It's Thursday morning, and this is Thursday Morning Live. Glad that you are here. Wake up, grab your coffee. It is, it's 8:30 already. And here's what I can't really realize or believe already is that it's almost Thanksgiving. It's November. Where did the year go? It's kind of funny because I've been working for the last several months on getting a large multifamily portfolio over the finish line and getting it closed. We're finally starting to get it closed, but it's been months of hard work. And it's funny how fast the months and days have just kind of blown by and gone by. So I hope that this year you've been able to work towards achieving what you set out to achieve at the beginning of the year. Have you taken some time maybe to do some evaluation of where your business is at? Is it where you want it to be? Is your personal growth where it's at or where you wanted it to be this year? And what are you doing to change that, if anything? Hey, I have a great guest this morning, and we'll get to him in 1 minute. But I just want to welcome you. If you're new to the show, thanks for being here today. I appreciate you. I appreciate you tuning in. Make sure you like us and love us on social media if you would. And if you're on YouTube, smash the subscribe button this morning, or over on Facebook. Join our community at Multifamily Unplugged, where we are always trying to bring you some great content, some good information that's going to help you scale your business, take it to the next level, give you that one edge, that one nugget that's going to give you an edge in what you're doing. So glad that you're here this morning. And remember, comments in the chat this morning. We're live. Feel free to reach out to us and ask any questions. Say hi. Tell us where you're from. Hey, my guest this morning, Matt Brunstrum. Matt is a friend of mine I've known for several years. He's with Lakeside Acquisitions. They do M&A, and we're going to get, let me bring Matt in real quick. Hey, good morning, buddy.
Hey, good morning, Mike. How are you?
Good, man. It's been a while since we've seen each other.
It has. It's been a few years, but just like us, it sounds like you're staying real busy. So that's great to hear.
I got to tell you, we both live in the city. I live on Washington Boulevard, and it's kind of funny because I'm looking right out the window as we're talking.
Okay.
And cars are going wrong way on the one-way street. The cops are going the other way, and it's total chaos out there this morning. So, typical city life. That's for sure.
Exactly. It's the hustle and the bustle.
I know. My sister lives in the suburbs, and she's always saying, "Hey, are you safe? Are you okay?" I'm like, it's fine.
I think the city's going to be a little buzzing tonight too with the Bears game. So we'll see how that one goes.
Yeah, that's for sure. It's going to be crowded. I'm actually speaking tonight up in Fond du Lac at a Wisconsin Apartment Association meeting. So I'm looking forward to that. But
great.
Hey, Matt, one thing I always ask my guests at the beginning of the show is, in one word, what best describes you personally and professionally?
Oh, great question, Mike. So from a personal standpoint, I'd say ambitious ever since, I was probably 8 years old, trying to reach out to my neighbors and start a lawn mowing business and shoveling snow in the winter. So always had that strong Midwestern hard work ethic. So I've taken that pretty seriously just throughout my career, and started my business a little over a year ago here at Lakeside Acquisitions, founder and CEO. I've got 4 folks working for us now. So I'd say ambitious from a personal level, and from a business standpoint, I'd say the best word would just be a connector. We're working with buyers and sellers of privately held, family-owned businesses day in and day out. So we're always connecting people and finding the right buyer and the right seller and putting them together. So just to recap, ambitious from a personal level and connector from a business standpoint.
That's awesome. You know what? I have probably done, 300 podcasts over the last few years. I ask that question all the time. I keep saying I'm going to write a book one of these days with excerpts of everybody's word, right? Mm-hmm. And it's amazing to me how often focused or committed comes up. But honestly, Matt, nobody's ever said ambitious. Mm-hmm. So I love that. And, I think that there's so much context behind that, right? About being ambitious. And You said it yourself, man, starting a lawn business when you were young, that entrepreneurial spirit, right?
Exactly. And especially if you're going to, invest in real estate, or if you're going to invest in a business, whatever that takes, you have to have ambition. And in order to, take that first step forward, take that leap of faith, believe in yourself and invest in yourself, and invest in assets that produce positive cash flow, whether that's multifamily or a business or some combination of the two.
Yeah, absolutely. Well, listen, I just want to comment real quick. There's a bunch of people on this morning. Please feel free to throw your name and where you're from in the chat. If you have questions along the way, don't hesitate to reach out. Matt, why don't you tell a little bit about you and your history and what you're doing today and how you got in the world of M&A?
Yeah, great question. So I started off my career at a large publicly traded waste management firm. So I was in their mergers and acquisitions department for about 5 years. So they were conducting, in our industry, what we call a roll-up. So that's where you go out and you buy 30 to 40 companies all within the same industry, a fragmented industry, and you put them together. So there's a multiple arbitrage. So you buy them at let's say, 4 or 5 times earnings, and then you put it under your umbrella, and they're automatically worth more before synergy. So did that for about 5 years as the big, working for a big corporate buyer. The next 5 years, I switched over to the other side. So we call that sell side mergers and acquisitions advisory. So worked for a M&A advisory firm in Chicago, and really came to that other side of the fence and represented sellers of privately owned and family held businesses. And then a little over a year ago, I've been the founder and CEO of a firm called Lakeside Acquisitions, headquartered here in Chicago. We've got clients throughout the coast. I got a client right now in California, one in Florida, Indiana, North Carolina, South Carolina. So all we do is represent sellers of privately held and family-owned businesses, sell their business for maximum value to large corporate strategic buyers, private equity groups, and in some cases, family offices. So all of our clients are doing, we play in the market called the lower middle market. So we're not your big investment banks of the world like a Goldman Sachs or a JP Morgan that are dealing with, $1 billion or $500 million companies, but we're also not your local business broker here in Chicago that's selling restaurants and gas stations and franchises. We're really in that sweet spot of the lower middle market. So our clients are doing somewhere on the low end between 5 million of revenue and on the high end 50 million of revenue. And then from an EBITDA or a profitability or cash flow standpoint, they're doing on the low end 1 million of EBITDA and on the high end 10 million of EBITDA. So we focus on a lot of more blue collar type industries or backbone of the economy type deals. So whether that's waste management, recycling, trucking, manufacturing, construction, industrial services, all of these, key sectors of the economy. And we're essentially trying to capitalize right now on just this generational wealth transfer. So within the next 7 years, by 2030, the baby boomer generation is all going to be at 65 and at retirement age. And there's about $10 trillion worth of wealth tied up in these privately held, small, entrepreneurial, family-owned businesses. And about 80% of them, Mike, don't have a succession plan in place, and they don't have a son or daughter in the business that is willing and able to take over. And even if they have a good general manager or operations manager in place, most of the time those folks don't have the capital or the wherewithal to buy these businesses for $5 to $50 million, right?
Hey, so I have a question for you. You go back and state that number again. How long before all the baby boomers are 65?
So you've got about 7 years. By 2000,
7 years left.
By 2030, there's estimated to be $10 trillion of wealth within the baby boomer generation, solely that's tied up in privately held businesses that needs to be transferred. That by that point, the last baby boomer is going to be in their mid 60s. And that's typically when we're seeing, these folks start to retire and start really thinking about their exit strategy. So it's the wealthiest generation, and they control the majority of small privately held businesses in this country. And
Yeah,
it's just
that's
amazing that
interesting.
they don't have succession plans, right? Or they don't have a son or daughter that's in the business or lives nearby.
And why do you think that is? You know, with all the business you've done and the people you've talked to, why do you think that people do they just, you know, I know when I grew up, I'm a baby boomer, right? And
Mhm.
I you know, turned 65 last year. But when I was growing up, I thought, man, I'm going to live forever, right? Do you think that's kind of the mentality of a lot of these people?
There's definitely that. Unfortunately, we've had some clients that have, they've sat in the chair too long, right? And it's all they've known. They've had this business for 20, 30, 40 years, right? And it's hard to let it go. For most of these folks, this business is it's like another child in their family. It's their baby, right?
Yeah,
So it's not being able to let go is one. Number two, it's they don't know what to do, right? It's if you don't have a son or daughter to pass the business along to that's been working in the business with you, and maybe they went and got their degree in law, or they became a doctor, they are living, maybe the business is in Illinois and they moved out to California, right? Whatever the case may be, they're not there. And then maybe they've got a great general manager or operations manager or someone in the office that's helping them run the business that they trust, that knows this business, but that person doesn't have the capital to buy the business, right? And this is a large asset. So many of these baby boomers and these business owners, they built a great business, Mike, an
yeah,
incredible business through hard work, ambition, entrepreneurship. But these are highly illiquid assets. You can't just go, you just can't go put a for sale sign on a business and start getting offers, right?
right.
So it's a highly illiquid asset. So they don't know where to go next, and that's really where we come in.
That's interesting. Uh, Back up real quick. Explain to people what EBITDA is.
Yeah, so EBITDA it's a financial acronym. That's essentially it's the fancy way to describe, and I'm going to relate it to real estate here, sort of like your net operating income of real estate. It's your cash flow. It's the true profitability of the business, and EBITDA stands for earnings before interest, taxes, depreciation, and amortization. So it's the true picture of a company's actual profitability prior to debt, taxes, and interest.
So that's funny because in my business, it's just called net cash flow.
Look, hey, the financial and accounting folks of the world, they like all these fancy terms, but at the end of
Right,
the day, we're all talking about the same thing, right? We're
right,
all
right,
about
right.
the bottom line, and it's funny because it is different between real estate and businesses, but we're all talking about the same thing.
Well, here's what. So there's this thing in business, whether you're selling a business or multifamily. I think multifamily is a business too. I buy these businesses, re-engineer them, put capital improvements into them, make them more profitable. And there's this thing called a multiple. In my business, it's a multiple of, how much money will be earned on your investment over a period of time. What in your world, multiple means how many times the business is selling above EBITDA?
Yeah, that's
Um, so what are you seeing these businesses trade at today?
Yeah, great question, Mike. So that really depends on a variety of factors. One, size, right? So the more you get to the $10 million of EBITDA or net cash flow range, the higher multiple you're going to get versus if you're closer to the one. It also depends on the industry. Certain industries trade for higher multiple than others. So for example, anything with recurring revenue, so say waste management, because there's a high degree of recurring revenue each month, is going to trade for a higher multiple than something that's just tied to construction, right? Because it's more project based. So it depends on, the revenue breakdown, some of the other, factors. What are the margins in the business? But in general, somewhere between 4 times and 7 times your average EBITDA.
It's interesting. I remember years ago, businesses traded at like 3 times, right?
Yep.
And recently, I've heard that they have been trading more 7 to 10 times, which is, and you start to wonder where wealth gets created, right? And you look at this, being able to start a business, where it really shocked me was I was on the phone with a private investor one day, and he was talking about a friend of his that was a veterinarian,
Mhm.
and how he had just traded out of his practice for like 10 times EBITDA. I was like, 10 times. I said, I've never heard of a business trading that high. And he said, yeah, that industry has really been, propelled a lot. And he said a lot of it had to do with COVID and people going out and buying dogs and having pets. So I just found it to be really interesting from, the business world perspective.
No, it is. I mean, especially in the last 5 years, I've seen multiples just continue to go up, up, and up. Other than maybe the last 6 months, just given where interest rates at, and I think there's a lot of similarities between business valuation and real estate valuations and how interest rates are affecting that, right? But you mentioned a great point earlier. It's just how to build wealth, especially for I think a lot of some of your listeners are my generation, right? And unfortunately, I think a lot of people in their 30s and 40s are looking for the next get rich quick scheme, or a lot of people fell in love with the crypto thing and don't want to go down that rabbit hole. But the tried and true way of 90% of millionaires or multimillionaires in this country, how have they made their money? We all know it: buying real estate and building businesses, right?
Right.
And that's the opportunity. You have to have ambition, and you have to buy something. And it's funny. I remember when the first time it's, hey, make your money on the buy, right? Make your money on the buy, and then go in there, find good acquisition capital, right? And get good debt, and force your asset to improve. Buy that piece of multifamily and put some more capital and improve it over time. Multifamily is, you can fix that business. Just like if you buy a business from a baby boomer today, make your money on the buy. Know going into that you got, 1 or 2 turns of EBITDA wiggle room, right? But then go in there and force appreciate it. Change the technology, add a sales team, streamline operations, go do another acquisition or 2, clean up your financials. All of these things, just like multifamily, where you can improve the value real quickly and force appreciate it, you can do the same thing with the business, right? And quite frankly, I see an opportunity for folks in their 30s and 40s that are on this call to work with you to buy multifamily, but you can also buy businesses as well, right? And have both in your portfolio. Get diversified.
Yeah, I talk about diversification all the time. Just a recent call with an investor. He said, "Well, I have a lot of money in my personal assets that I manage." I said, think about diversification. Why not have some money on the passive side, whether it be in multifamily or whether it be in another business, but diversify, because if some part of the industry goes haywire, you have some protection on the other side. Or if your business isn't running well, you have some protection over here. So it's interesting when you talk about that. And I love the comment you made about buy your or earn your money when you go in, right? I always talk about that is you make money on the purchase, but in real estate, you don't realize it till you sell, right? So it's not like you get paid on the purchase. And there are things you get paid for, acquisition fees and capital improvement fees, things like that. But you make your money on the sale. So if you buy a deal right, whether it's a business like you sell or multifamily, when you get out is where you really profit.
Exactly. And that's very similar to buying a business, right? Let's say you come in and you buy something for 4 times, but it's truly worth 5.5 or 6 times. You're not going to realize that until you sell it, right? And that might be a 3 to 10 year window, depending on what your investment time horizon is. But going in, right, you're carrying that, and that's a beautiful thing, right? And it's very similar to multifamily in that way.
So, Matt, we're kind of in some uncertain times in the economy and the world right now. We're in that cycle. And I've been studying a lot about real estate cycles and how, real estate cycles used to last maybe 5 to 7 years. Now they're lasting 8 to 16 years.
Okay.
right? So, is the market for you today in trading businesses? Are businesses still selling at those higher multiples, or are they, is the bid ask different today than it was a year ago or 2 years ago?
Yeah, the landscape has definitely changed. I'd say after the first quarter of 2023 this year is when I started to see valuations come down for most industries, right? And that primarily just has to do with rapidly rising interest rates and just a lot, I think, fears in a lot of people's minds of what's going to happen here in 2024 and just the general economy. So valuations, I'd say across the board, I'd say down 15 to 20% depending on the industry. But it truly depends on the business, and the market and those factors. I got a great client right now that we're at double-digit multiples already. So it really depends. But look, my thoughts on that are similar to real estate, especially if you're an entrepreneur looking to buy real estate or whether to buy a business. This is your time to capitalize. There's still deals getting done. There's still lenders out there. You just have to look a little bit harder. And you have to be ambitious and you have to persevere and you have to go find the right deal. Right.
Yeah.
And so there's, this is the time to set yourself up for the future is the way that I look at it.
It's funny you say that because, last year we looked at 90 deals. It was about $1 billion in transactions we underwrote, trying to find something that made sense. We uncovered turned over a lot of rocks, opened a lot of doors, and finally found an off-market deal, this portfolio we're working on that makes sense. And so, it's interesting. The more you look, the more you pay attention to the market, what's going on, pick those specific markets, the better deal you're going to find, the more opportunity that's going to show up. And, that goes back to your word, ambitious, right? You got to be ambitious to do it. And you got to be opening those doors every day. So.
Well, and I think we might have talked about this before. And, when I was going through, your courses is, even if the deal doesn't move forward, it doesn't transpire, you learn something from the deal.
Right.
You get a little smarter, you get a little wiser, right? And you said, Matt, I've been doing this a long time. And every year I learn something a little bit different. Every deal that I look at, even if it's not the right deal for me, I learn what not to do, or I learn from that property owner's mistake. I've taken that same lesson from you, Mike, and I've that's helped me in my 10 plus year career here. And every deal you get a little bit smarter. And even if it's not the right one, hey, that's okay. You learn something from it, right? It's going to help you become a better investor or a better connector, and a better operator.
Absolutely. I'm glad those points that I made stuck with you, because we always hear things in our life and those little nuggets. Like I think back listening to Jim Rohn and when he talks about success leaves clues. And you always look at successful people, other people that have been successful. What have they done? How did they get there? And what can I pick up from that journey? Hey, Matt, listen, this has been great this morning. If people want to connect with you, maybe somebody has a business they want to buy, maybe they want to invest, maybe they have a business they want to sell or need a succession plan. How do people get in touch with you?
Yeah, great question. And thanks for bringing that up, Mike. You can go to our website, lakeside-acquisitions.com. You can also email me at mbrunstrum, MBRUNSTRUM at lakeside-acquisitions.com. Are the best two ways to reach us. So feel free to go to our website and submit a contact us on our contact us page, or email me directly.
Thanks, Matt. Appreciate you being here this morning. And I just encourage people to get a different perspective. I've talked to some people, they're burnt out on multifamily, or they're burnt out on real estate right now, or they're scared. I think there's two types of people in the market today. And the ones that think, oh, next week there's going to be a better deal. And I don't necessarily believe that's true, because those good deals that come to the market, they're going to wind up getting scooped up by the big boys. So don't wait, right? And then the other side is people who say, I'm afraid. But you know what? Warren Buffett said that when people are running in fear, run towards what they're running from. And I think it's the same thing in your world. So if you're burnt out on multifamily, call Matt. think about maybe putting a business in your portfolio, especially if you need to make cash flow, build some long-term wealth, and get some tax planning strategies through the depreciation. Because this is the time of year, if you made too much money this year, you want to offset that a little bit for more cash. So
Exactly. Those are
hey,
all great strategies and insights, Mike.
yeah. Hey, thanks for being here. I appreciate it. I want to just say goodbye to everybody. And remember, follow us on social media. Like us, love us. If you're on YouTube, subscribe on YouTube. We're always bringing out great content, good information for you. And on the Facebook side, Multifamily Unplugged, join our community over there. You're always going to hear about new events coming up, live events. If you miss these Thursday mornings, those will be replayed over there. Look forward to seeing you somewhere